Good morning, everybody. All right. So we got a bottoming tail bar yesterday. Prices came down. Well, futures dipped down below the 200 MA. And Jake's already sharing numbers with me. Thank you, Jake. Let's see. 30. All right. Let's see. Let's do this first. So the question is this, the slide you can see there, can yesterday's technical bounce continue? It attempted to after the economic numbers, popped up there. Numbers were kind of mixed if you listen to the commentary or depending on what website you look at. I suppose whatever, continuing up and then back down again. The numbers just weren't as bearish as maybe they thought. Anyway, looking at the technicals, as we look at the futures anyway here, S&Ps, prices came down to this support level. They 200 MA is a bit subjective as a reference point, but as we know, most people are going to be looking at it, even on the futures, but primarily on the S&P 500 is where that 200 MA, 50 MA is where the institutions are really looking at to see if it holds, breaks, closes above, below, and so on. What we have happening now, this is a 24-hour chart, is a downside shakeout, as we call it. Why isn't it a head and shoulders bottom as I drew it out here? Well, it could be. Patterns form in different ways. The difference between a shakeout and what we would call a historical head and shoulders type of a bottom would be that the head is more of a rounding type of a head, so to speak, versus a V bottom, where it's an emotional spike to the downside and it rips higher. Of course, in the time frame that you're looking at, if we went and looked at this on a 5-minute chart, whatever, it could be more of, it wouldn't really look like this overall, but this spike down here, I'm sure would have more of a rounding type of a bottom. So whipsaw here early this morning, it cleared these highs, and it doesn't have to be a perfect kind of, less erratic movement. Looking at this, if we were to look at it on a closing line chart, you would see it looks okay. So things have to calm down here this morning if prices are going to continue higher. They are a little extended to the downside. One of the ways we measure that is the distance from the 20 MA, but they did have a little bit of a refueling process, a little consolidation right here, which you can see is this sideways price action, and where I've got this marked off in red. It's kind of wide because it was whippy. How high will it get? Will it stop here? Well, if it clears these highs, I would say not, and there's a better probability that it could come up toward the top of this range. We'll see. So we have to formulate a bias as to what we think could happen. And as far as getting up there, well, this crazy price action is going to have to calm down, which will probably take a little while. So it may take until, 10 o'clock or so. And I think there's some other numbers coming out around that. Yeah, 10 o'clock, there's a Fed guy speaking. I don't know how much pending home sales are going to affect anything, but just be aware at 9 o'clock. Well, this guy's probably talking right now. And then at 10 o'clock is pending home sales month over month, year over year. That may affect things. So at 10 o'clock, which would make sense, things begin to calm down here, and we'll see which way things flip at that point. Let me get back here. Okay. NASDAQ futures broke down below this little support level here, and you see the same type of a bottom here. 10 o'clock impeachment starting. Well, I guess they're going to, they got so many kind of problems, if you will. What are they going to do? They have, I guess, researching or talking about that. So an inquiry, right? They're not actually starting the impeachment, but, I think right now the markets, institutions, everybody is more focused on what are they going to do? about coming to some agreement about the budget and all that. And maybe it's going to go into the weekend. We'll see. There's always a drama involved, how they're going to do this and the pressure they need to be put on and whatever. So technically, we got the similar kind of a pattern. It's bouncing off of the lows, and we'll see if we can get above the opening price and where it might be able to go. We've got the same kind of congestion over there. The Dow, breaking down. And we need to take a look at just the regular industrials, which I'm going to do right now. And we'll get to SPX. So you see the steady movement down. There's no 24-hour chart, so you don't see that same pattern on the 60-minute chart. But we do have a bottoming tail bar that formed. And so here's on a 5-minute chart, you see the little retest pattern after that 5-minute. And I don't know if McGraw's here. He wasn't in the room yesterday afternoon, but one of the things that I mentioned in the room and something discussion that, that we had the day before yesterday, that McGraw had shared about volume on the day, what was happening. And if you notice that down here yesterday, there was a large volume. The majority of volume in puts was at 42.50 and 42.40. So when this broke, it went down to that next level, and then it spiked up from there. And while this was going on here, the ticks were at under minus 1,000 for a while, which we haven't seen in some time. So I don't know if you want to call it a cumulative tick. I don't, that was a lot of negative ticks going on during that time, and eventually it all came together down as prices spiked down here, and then spike up, and those were expiring yesterday. So the idea or the thinking here was like, put yourself in the position of somebody owning those puts, and now you're finally at the money here, and these are in the money, and the clock is ticking. You're going to take your money. and so I texted Dan at the time, was like, hey, maybe that's what caused this rip to the upside. This option activity does have an effect on what's happening intraday and sometimes day to day. So that was something interesting that was occurring, and how it, all culminated down here where the big bets were that it was going to go lower. And you can see that, it happened at around, what it was, a little around 130, 145 or so. And it ripped up here into this area. So I'm going to review SPY. So these are actually, I moved that. I don't know if it'll put it back. These, shoot. Okay. These were yesterday's numbers, almost tagged the bottom. I said the upside was the better one. Today, and the downside at the moment, sounds like a no-brainer. That's the upside today. And 4,200. Last I looked was where the premium was. And so, prices are wiggling around here. And, coming down to the 200 MA, that's a long distance away. So I think it's unlikely that's going to go down there. And can it get up here? Well, if things get turned around from where they are now, maybe, but probably less likely that it would get down here. But as far as coming down to 4,200 after being up here a short period ago, I think not. I didn't move these from yesterday. Let me just go back here. Jake shared 43.30 by 45 for 50 cents. So those of you that do these, you can consider that 43.30 by 45 for 50 cents. And I would say that is probably a no-brainer spread for SPX as well, if you can get that going near the open. All right, SPY. review that. But you can see the whipsaw. Where is it now? So every morning we look at where things are trading, right? Pre-market. And just like yesterday, we looked at the size of the gap up. This was or down, what's happening. And so there was a little gap up, wasn't much. If there was a significant gap up, right, into that red bar, it would have been a greater probability that it could hold that, where yesterday was a small gap up and things rattled around, eventually went lower down to this minor support and rallied up. And now we've got this whipsaw going on. So it's a small gap down. Yesterday's low will definitely, if it should get down there, will definitely be an area to focus on for support, since it had that spike move off of here. Right now it's holding the pre-market lows, and more than likely prices are going to rattle around in here. There's some other numbers coming out tomorrow, and so I don't expect any kind of a significant move one way or another here today. Resistance, you can see up here, 430 will be likely a difficult level as well. And, it's got to get through yesterday's high to even consider that. And right now, you can see things are just whipping back and forth in a relative mess for the moment. Qs, breaking down, working their way down to this major support. Not doing much of anything either. So intermediate term, we're still looking for lower prices. Yesterday, let me fix this. We talked about the internals coming down to a level where the commentary was, well, we probably go lower. You better be careful on the short side because things could flip in the other direction at any time. And yesterday, obviously, they flipped in a big way. Now, the question is, how much can they follow through or not today? So we're poking down through the lower band on sentiment. And you think, well, it's immediately had to turn around. No, it doesn't. So and I haven't seen this in a while, because we haven't been in a very bearish market in a while. This may be where that's going to happen, and what you might say, well, why do these bands even exist? With static levels of 1.2 and 0.80. Well, they exist because market environments change. And in a very bearish market, this sentiment moving average could and will eventually poke down to 1.3 or 1.4, which is very extreme, and breadth will poke down under minus 300. So while we're in an area that says be careful on the short side, it doesn't mean prices in this particular environment have to turn up. Whereas if prices were in an uptrend like this, and we saw sentiment readings in the lower bands and coming down under minus 100, we'd be looking for a short-term bottom for prices to rally within that uptrend. Prices are no longer in an uptrend. And so, as I said, these bands will compensate for bullish and bearish market environments to give us dynamic levels, which has worked out very well over decades. Yeah, of course, they can become more green, if you will, or, and so you can see this band is a dotted one and this one is a solid one, and vice versa. And over time, market environments change, which I've said, things can go to a more extreme level. And I've said what those extreme levels are. I think it was last month I mentioned, intraday, you can set alerts at 1.3, which is just the raw data, and 1.5, which could give you a heads up to a turn. That's a good intraday internal measurement to be aware of. All right, let's continue here. Transports, moving down. This is the ETF, which is below the 200 MA. Yesterday I mentioned setting an alert on these transports, the cash at the 200 MA, and at the time of that reversal is when the ticks were extreme. SPX reached down to that 4240 level. The transports were down there at the 200 MA. And it was like, pay attention here, that things can coming together for at least a short-term turn. So looking at the 200 on a daily chart on a cash index that's widely followed just makes a whole lot of sense. And when it lines up with an area of support, it's like, you better pay attention to it, because that's what the big money is paying attention to. So you need to be aware of certain levels in important, markets that everyone's looking at. All right. We looked at the Dow already. That's well below here, closing under the 200 MA. And this is after, look at the weekly chart. This is after breaking out of this downside shakeout, head and shoulders bottom, and prices are coming down, which is a failure at this point. So it's not going up, up above these levels anytime soon. Where over here, it looked like that was going to happen. So you need to be looking at things with objective glasses, because sometimes things just don't follow through that look really convincing, as this did. All right. Bitcoin, just wild trading there. It was just like, this is a pattern just to stay the hell away from. This was really yesterday. It was like, if you didn't pay attention to this and you were looking for a bottom before prices reached levels that made sense, was just, you were just missing the boat with interest rates just ripping higher as they were. And they're higher this morning. And one of the comments that I heard this morning on CNBC was about now these yield curves are beginning to turn, some of them positive, as this one is. Some are still negative, but things are improving because intermediate to longer term interest rates are ripping higher. So they're not going higher because of a bullish economy where demand for money is increasing. That's when interest rates go higher. That could be a good thing, and you could balance that with a market holding up. That's not what's happening. It's because of more inflation fears, and that the Fed is going to increase interest rates. But one of the things we'll be discussing is this page in another MT Live and what's going on, market internals into market analysis. But for this morning, let me just get back over here. Just giving my laptop here too much to deal with, slowing down. So I'm going to hand it over to you, Dan. The expectation for today is things are going to whip around here a bit this morning until things calm down.
Yeah, but you got to admit your IBM 286 has been a stellar performance so far,
and it's lasted about 50 years. So maybe it's time for a new one.
No, I would stay with it. It's a beautiful machine. Yeah, he has an IBM 286. That was my first computer.
It's an AT&T 286.
No, mine was IBM. I remember it. I was in college and my dad bought it for me. It was IBM 286, and then they came out with 386. All right. So yeah, our bias yesterday was a Climo over yesterday's high. I'm jiggling around here, so yeah, I like the idea of chilling here at least till 10. Let's go right to earnings. We did 2 condors. I'll get to MU. When that's just, yeah, that I don't have a bias. Call spread maybe. But then that has a void and all these bars are going to be resistance. Greg, I'm showing my screen, so we get the same problem. All right,
Yeah.
thanks, Patrick.
Hold on. I'm gonna have to kill this computer here. Hold on. It won't let go.
But I wonder why mine doesn't take it over.
Because it's locking up Zoom.
Hmm.
I think Zoom is the culprit.
Um,
I'm trying to kill it.
yeah. So I'm just talking here. Why you do that? We got a couple earnings. We got housing. We said we got somebody's Patrick said 4 Fed speakers today. Tomorrow, PCE. Tomorrow is that big JP Morgan expiration. They do it every quarter. So the trade they do for clients is they sell, it's a collar. They sell out of the money call of a certain, percent away, whatever. And then they take that money and buy an out of the money put. And it's a collar. So it just, in the event, it's you're capping your gains, but you're capping your losses too in a big old trading range. And so that big open interest of the 4,200 is what's expiring tomorrow on the JPM hedge. And there's other big open interest tomorrow or so. This week is actually coinciding with stabilization and unwinding into tomorrow. So it could, I see mine now. So it could be just perfect for us to slop around today, tomorrow, and then over, whatever resistance it is, we get our rally next week. So that, we'll see if that sets up. Earnings here, MU gapping down, nothing to do. Like Jeffries gapping down a little bit. We'll come back 10 a.m. see what it's doing. Napa fairly flat, no pattern. CNXC bearish gap, $70. So that has room to fall. That's what we call a bull trap, gapping under this consolidation. I'll put that in a window, other computer. CNXC would be a beautiful call spread for tomorrow. If there's any, whenever I say candidate, you got to go through the checklist. Are they liquid? How far away? Weeklies, monthlies. What am I going to get paid? Liquidity. WOR happened into yesterday's range. No interest. Full. Looks like it's opening flat. No pattern. All right, ACN. We did a condor. We sold the 330, $2.50 wide call spread in the 297, $2 wide put spread. So it's gapping against us. It's still over the short strike. Ideally, we get a little bounce and we close it out at a profit. I'll be watching, of course. I'm in it. Jable 108.70. That's a bullish gap. I'm going to put that in the window. That would be a great put spread, 30-minute high. KMX, we also did a condor. And this one's gapping right to our short strike, the 70s. And then we did the 88s. So same deal. I'll watch it. Ideally, it bounces and we'll get out at a profit. This is a light volume of interest. Just a couple miscellaneous things here. Coin CEO was on CNBC. And he says he likes Bitcoin because of the fundamentals. And really? It's like people people say, oh yeah, because there's only, it's a limited supply, 21 million. Well, guess what? What if I said I'm only making 21 million Beanie Babies? Is that a good commodity because of limited supply of Beanie Babies? I mean, think about it. I don't know. That's a big, deep discussion. RMD. Now this, in terms, we've been talking a lot about climactic buy setups recently because there are a lot of them as opposed to, you know, comparing a climo to nasty steady selling. This is a beautiful climo on the weekly. You know, it started from a nasty breakdown, but look how it's accelerating from the 20. And when we say accelerating, you just look at the distance between price and there, and the distance between this and this. And now I got a 180 reversal on the weekly, which is this 3-bar move. So ideally, this would retrace and set up a higher low W bottom, and then I'll be all over this pattern. So I'll keep an eye on it. So Jets, here's an example of just notice how price and the 20 MA are parallel and declining. So that is not NOT, not a climber. There's no accelerate. That's a nasty dumping pattern. Look at Jet Blue's another one. Look at this weekly. It was 950 just a couple months ago, and it's cut in half. I mean, that's kind of just, it shakes my head a little bit. Like, wow. Pod, this is a climb. I told Greg ever since this gap down, I had been watching this stock. I've been watching whatever the math is, 5 weeks there. And it had a nice close here. So it's still not ripe, but like that other one, if it can go up again and then give me a retest, then it might be ready. Now this was a beautiful breakdown failure, 180 reversal with a price void. We love bottoming patterns like this. And wow, this looks like a buyout. The way it goes sideways at a big number. Look at that, 750. Man, who's buying that? But that's it. This we talk about breakdowns, breakdown failures, taking it private. That's a beautiful breakdown failure, 180 reversal. There's a lot of stocks down a lot, but I've made multiple bar turns like this, Intel. So this is on my put spread watch. Sitla, this is one of the 3 automakers on strike they keep talking about. Now this one actually had a bullish move up. It's above the 2050. It's actually a buy setup. That's a buy setup. So set an alarm at 19. Pop a mic alarm. There's that's a climo. And it's a climo and a bullish gap. So if somebody wants to watch that for us, well, I'll put it, I'll watch it. Apple alarm. Greg, we have a bear put calendar spread.
That was a mouthful.
I know, because I'm staring at ACN. Wow, our ACN, the spreads are ludicrous, which is why we got a ludicrous spread on ACN. We got to let it settle down. All right, so Apple, let me set new alarms, but that trade's working well. Jabil is a gap and go. I was hoping it would rattle around until 10 a.m. Let's see how much we're up in this Apple trade. Check our KMX too. All right, our KMX is the midpoint right now is 85. We sold it for 70. So we're only down 15 cents. So I'll keep a short leash on it. Oh no, we sold it for 7. Wow, we sold it for I'm mixing this up with the other one. Let's close it right now. We got a profit. All right, out 75 cents. So Greg, here's another one went way the heck against us and we got a nice profit.
Amazing strategy.
Well, it didn't until, we get burned, but I tell you the good, bad, ugly. I don't hide them. So we sold them for 92 and closed them here at 70. So rider up alarm. We're short the $100 puts, but this looks like a directional now. But I'm not going to do it with the iffy market, but that's a beautiful pattern right there. FDS alarm. This was one that started as a 1, 2, 3, and then a